Here's Brody Brazil.
Yeah, so like a lot of people, I joined the Peloton community at the very beginning of the pandemic, made a quick order, and by the third week of March, I'd say, we had a bike at our house. And I've loved it ever since. I think it's a great company. I think the product is awesome. And that's why I'm interested to see how they operate. But I'm also like a bit surprised that they are struggling this mightily as the world tries to transition back to normal and people going back to regular exercise routines. I mean, look, I loved my experience at Orange Theory, but it's just that my way of life, my timing, opportunity to work out, the Peloton at this point in my life suits me and my wife a little bit better. Let me go into this article here on CNBC. Peloton shares plummet after the company reports a big loss and declining revenue. And what's crazy about that, I mean, they just signed a deal with Amazon to sell products. So you would think that would have boosted optimism. Apparently it did for a while, but not so much lately. Peloton on Thursday reported widening losses and slumping sales for its fiscal fourth quarter as the connected fitness equipment maker attempts to win back investors with cost cuts and strategic shifts. The company's shares declined more than 20% a day after the stock surged more than 20% on news of its partnership with Amazon, what I was just talking about. It marks Peloton's sixth consecutive quarter of reported losses. That's amazing. And, you know, I've been keeping an eye on not just bike sales and the new version of the bike, but also the treadmill they came out with. And I heard that a rower was not very far off in the future. I think a rower is a tremendous idea. That's a great way to get exercise. I know there's a few similar products out there. You'd think Peloton could do it right, could do it well. I would root for that to still happen, but this obviously, I would think, puts it in some question. The company said it aims to reach break-even cash flow on a quarterly basis in the second half of its fiscal year 2023. Still, Peloton CEO Barry McCarthy said he expects the market for connected fitness will remain challenging for the foreseeable future as consumer demand for at-home workout machines wanes from COVID pandemic highs. And yeah, look, very clear. I mean, Peloton gained huge when people had no other choice, but it's not like they make a bad product in terms of the bike, at least. I can speak to that, or the instructors, or the subscription service and all the classes. I mean, it's a really cool ecosystem, and I see how it works for so many different people. And there are other classes, yoga, and free weights, body weights, running. There's a lot that comes with your membership, which, by the way, the price just increased on that. But it's just amazing that how popular they became, how much and how mightily they are still struggling here. Since McCarthy took over as chief executive from Peloton founder John Foley back in February, the company has pursued sweeping changes that have yet to fully pay off. Peloton raised membership fees, hiked prices on some equipment, laid off thousands of workers, tested a rental option, exited last mile delivery, and transferred all production over to third parties. That last one, a bit concerning. Again, the bike that I have, so well built and made and thoughtful, I would hope that their quality of product doesn't diminish. On Wednesday, Peloton also started selling a portion of its products on Amazon in the United States, the first such deal with another retailer. Quote, the naysayers will look at our fourth quarter financial performance and see a melting pot of our declining revenue, negative gross margin, and deeper operating losses, McCarthy wrote in a letter to Peloton shareholders. But what I see is significant progress driving our comeback and Peloton's long-term resilience, he said. We still have work to do. Peloton did not offer an outlook for its upcoming fiscal 2023 for the first quarter that ends on September 30th. It said it sees subscribers staying flat and revenue ranging between $625 and $650 million, which is short of analysts' estimates. Peloton said this takes into account near-term demand weakness and seasonal fluctuations to the business. Again, just some closing thoughts and comments here. It's such a good product. There was such a wide customer base. Once you have a bike, I don't see a lot of people canceling. So I don't know if they just grew too fast and had too lofty ambitions and got too far ahead of themselves on a business scale. Just from the customer side, all I see is a good product, that's innovative, that keeps changing. I think somebody, even if Peloton really, really struggled here all the way down into the ground, somebody would take over this company and this ecosystem, and they would try and revive it. But I don't know what that means in terms of the product, right? Classes, maybe fewer, or options, or I don't know. How could the product actually get worse? Besides the offerings, or maybe the cost of a membership going through the roof. Or maybe it would be a per member membership instead of, like a family deal. Nonetheless, it's sad to see. I'm following this. Let me know your experience with Peloton. And are you surprised by this? You would think that when they link up with Amazon to sell their products, this is kind of the way out of their troubles. Instead, they're projecting even more complications down the road.